Phoenix a good team.
All right, ladies and gentlemen, welcome back. We got Chart Talk 97, 98. Bennett, we popping bottles for Chart Talk 100?
You tell me. I'm not sure.
That's a yes. Then that's an absolute yes. Bennett's got me out here. It's 9 a.m. in Denver. Fucking, having my first cup of coffee. Getting on the early tip. I hate it, but, let's jump right into Market Outlook.
Oh, boo-hoo. Let me play a sad song for you on the world's smallest violin.
So, we're dealing with a very critical area in the market right now. You can see the SPY, this uptrend. It's been intact since legit, November of 2020. We've been in this, 10-month trend, and we're testing it. We're testing it lower and lower every time. Oh, I wanted to bring up an important chart. So, right now, it's going to be decision time for the market very, very soon. We're seeing a lot of underlying weakness. We can't stay in this little area forever. Either we bounce hard off this area and make a new high soon, or we just fail and we see stocks come in a bit more. I had an interesting chart I posted this morning. Here it is. Hold up. Where it's talking about this market since we've bounced. And this is March 2020. You can see we bounced 64%, pulled in 11%, bounced 22%. So you see what's going on. It's mapping out the bounces of this trend. And you can tell at this last bounce, the bounces are getting more shallow and more shallow. This is beginning to tell me that the buyers might be running out of steam in this uptrend, and we might be dealing with a greater pullback soon. That's what I'm kind of preparing myself for. I don't think it's really time to have the foot on the gas. We haven't, the previous 5 weeks before this last week, there would be like 20 alerts a day. There's opportunity out the wazoo. Now, if you've noticed, there's probably been only a handful of alerts in the past week because that's really what the market's allowing right now, or that's really the setups we're getting because the market's starting to be under pressure a little bit. So I'm definitely in more of the camp that it could be pullback time in this market. We'll see. Midday right here. I think today's very important, but I do think we break this 440 to the downside somewhat soon. Not exactly sure when or how it transpires, but that's my thinking. So my foot's off the gas in a wholehearted way, and it's really helped me out the past week and change. What you thinking over there?
So same thing on definitely doing less. I think though one thing I've been focusing more on, or my outlook is more if we shift into kind of like a range bound consolidation. We've seen this with the small caps and mid caps lately. Again, the mid caps and small caps had a big run up earlier into 2021. And for most of this year, they just kind of consolidated in a very nice, kind of wide range flag. We saw in the small caps, we said here in the mid caps. And that's kind of my thought for kind of the Dow Jones, the Dow 30, and as well the S&P is that we, again, do probably crack 440, maybe even 435 or even down to 420 and start to create more of like a bigger flag up in this range versus the, kind of the constant uptrend that we've been on. So that's my outlook kind of going forward is more of a range bound consolidation, but same thing, just doing way less. I have no orders in right now.
Right.
Raised a lot of cash yesterday, and just less is more is definitely the overall theme I think right now.
Right, and if you remember, when we started doing the alerts and everything, we would always feel so much pressure to always have alerts firing, no matter what the market was allowing or what the setups looked like, just because it was the nature of the business. Mm-hmm. Now, as we've grown older and we've had a bunch of years through this cycle. Now I have no problem taking my foot off the gas, being like, this isn't the time to push it. Mm-hmm. So I think we're doing a great job of really, reeling back the risk. Because so many times in my career, I've pushed it when I shouldn't have, and I've gotten hurt, I've lost money. You get so angry because you're trading shit setups, nothing's working out. So overall, I think we're doing a great job of handling the market the past 2 weeks with what we've been dealing with. Yeah. What's next? Where are we going from here, buddy?
Top ideas, which will probably be quite quick.
Top ideas. Well, all right, here's what I'm doing. I'm not really looking at individual setups. I'm more of like getting the shopping list ready. So I'll go through a bunch of things I've been looking at, like DLO, very strong name. Don't think it's ready quite yet, but when it is ready, I think this explodes higher. This UPST, it's went on such a crazy run since earnings. It might be too far gone to look to trade anytime soon. But if we see a market pullback, a bigger market pullback, and this gets taken down, this is one I want to be involved in. Same with this Netflix. This has been a market leader. This is starting to pull back. We get 560 here. I think I'm going to, take a shot there. Another one is this XLRN. Really nice chart. Really nice base. Really nice weekly chart. That one's shaping up really well. Shouts to Heaven. Heaven just posted a couple good ones. This ATKR. Huge earnings. Really strong name. And another one he posted was this Love, LOVE. Exploded since earnings. Kind of doing a momentum bull flag right now. I'd like to see more sideways. But, I just want to have my shopping list ready for when we do see that market turnaround, so I know which names I want to attack instead of just feverishly trying to buy some random bullshit. I want to buy the best in breed that's pulled back because of the market. So that's really my focus right now. What you thinking?
So one of the sectors that has been lagging for quite a bit, that has been again kind of flagging out, basing, has been energy. And if you look at a couple of energy names today, we did see a few of them breaking out. And one of them that's setting up is this CDX up through 100 versus 95. It's about 5% risk. You'd probably look at it for a short term, kind of back to that 112 area. So that's one I'm keeping an eye on. What else? Again, keeping a closer eye on Aflac, and we were again looking to buy up through that 58 all-time high. But if it can start to base out here and kind of sneak in up to 56, and then add 58, that's another one. And this QRVO, which again has been based, kind of flagging up here, this 160 to kind of 200 area, and it's just been getting tighter between 175 and 185 recently. So that's another one. But again, very small shopping, small list of names I'm looking to buy. But again, like you said, looking to find those names that are setting up, if we do get a little bit more of a pull in.
Yeah, definitely.
All right. So with that, Jake, you want to go over any good and bad trades?
Yeah, let me recap everything I did last week. We were talking about we did so well. Because we filmed the last one, in the middle of the day, and we weren't really sure. I'll show you what day we filmed the last one on. It ended up being, September 7th, this day right here, or maybe the 8th, whatever it was, right when the market began to pull back. And we were filming midday, and I was like, listen, I'm taking profit in these winners. I don't know if it's the right move or it's not the right move. You can only, deal with the information you have at hand. And it really, really paid off really well. So I'll go over all the pain I avoided. I got an Apple September 7th, or September 8th it was. So it was this day right here I got out. This SE. Some of these are just a little lucky too, Mm-hmm. But I got out that one, the SE September 8th, on that turnaround. Or September 8th right here. Airbnb. This one still looks pretty good, but I took it off into strength here. This September 8th day, we were long from down here, this 152 area. DraftKings. I still think these names go higher, but if I'm trading for income on a short-term basis, I got to take the profit off on the table. So I got out of this one on this day. IART. Avoided a shitload of pain in this one. I was going
to ask you, you know about IART, because that was we were selling
crazy.
Weren't you selling 76-ish?
76 on September 8th, and I don't know if it's the right move, and then now it's down at 69. What else? This DoorDash, I got out of this one, but this one still looks good. This is the one I probably shouldn't have gotten out of, but I'm not mad at all that I did. Judging by everything else I did. DoorDash was not DoorDash. Bumble was another one. Avoided some pain here, getting out in this day. So I avoided a lot of pain by getting out when I did, and then not going back to the well too quickly, because there were a couple times it looked like these names were going to pivot. I was like, I'm done with them for now until we see a real turnaround out of the market, and it ended up really saving me a lot of cash. So I was really happy I did all that last week, and I haven't done a thing since. And I'm so mentally ready for when it is time versus being all fucked up in the head because I overtraded the past week when it was really tough.
Couldn't agree more. I think the one thing I know, again, for some of my trades and talking with a bunch of the members, where it's there's been this disconnect where it's when you have those big winners, it's they're trying to find the reason to get out of those, where really it's the ones that have been working, it's you want to stick with them. Where the ones that are just they're just trades that, and again, for the most I'm going to go through, it's there were a bunch of trades I put on that I was willing to give them, 2 or 3 or 4% worth of risk. And by the next day, it's I can get out of these things, kind of break even or lose as little as possible, when it's more than likely going to just come back to my price anyways. Those are the ones I'm going to be willing to change the game plan and take my money back. Where the ones that have worked, maybe I might move a stop a little bit, but I'm not going to try to overly complicate the one that has been working. So that's kind of the overarching message for.
And that all comes to experience and account management and all things like that just take time to develop. Of all right, I just got in this one. The market's probably pulling back. I don't want to sell all my winner just yet, and for this new trade that hasn't broken out when the market's been so strong. So I definitely agree with you on that front.
Yeah. So I'll go through a couple of them really quick. So first was the CTAS. Jake, this might have been even one of your ideas. Through like the 397 area. I got into this one, pulled back to 390. That was kind of the pivot. And I started to break out. It looked great. But again, as we started to see it, fourth, fifth day up, we saw a little doji at highs. I just had to stop below that low a day. The next day, it opens up kind of under that 410 and then just completely sells off right back to my price. And this was, again, a tiny gain, maybe 1 or 2%. But this could have easily been a break-even trade where I had no problem with just like getting out of it and taking a little bit of money and kind of moving on versus
not to cut you off, it's only 1% gain, but you take 300 of these trades a year, that shit adds up.
Yeah. Next was this ALRM. This was one we got into kind of end of August. We added up to started to get up towards this 86. It was looking good as it started to roll. This was one where originally the stop was for 76. Then I moved it to 78. And I slowly moved it up to 80. And then I moved it up to 82 and eventually got stopped out. And this would have been a trade where had I not taken the gain at 82, I would have lost money on that ad right now and been closer to break even on that first ad. So again, nothing about, not a crazy gain on this one, but again, still made some money and, can easily get back into it if I have to. And then getting into the rest of the ones is like QSR. Again, bought up through 65, $1.50 risk, nothing crazy. But when I'm expecting a breakout through this, areas of basing and it only goes up, 50 cents in my favor, but I'm giving $1.50, it's just time to move on. So this was one, break even, moved on. And this is one where in another day or two, it can easily flush 63.50, which isn't that significant in the scheme of things. It was just a spot that I can give it some tight risk. And this was one I just lost nothing in.
Doing these things, you're factoring the market environment that we're dealing with. We're just seeing the market pull back. It's not, if we're in one of these raging markets, you're probably not going to be so quick to take that off.
No, 100%.
But you're just factoring, the environment and the market conditions that we're dealing with.
Yeah.
It's an important caveat.
Yeah. Next one is this BBY. Again, we've been keeping an eye on this 124 kind of major area as this was coming into support. We, I bought up through it versus that 110. This is another perfect example. We're buying up off of support. Really want to see some, a faster move off it. We don't really want to see it kind of hovering near that same area that we were buying. And for basically 2 or 3 days, it just stood in this range of just kind of getting held on by the 200-day. And I had the opportunity to get out, basically break even, or say, let me give it versus the low of 110 and trade it properly. So in that trade, I got out yesterday for break even. And today I would have just gotten stopped after that $2 loss. That I just kind of felt that was where the trade was kind of going. Yeah. Same with this DRI, and same thing. Was trying to sneak in through this little 150 area and kind of get 3 days where just, again, I'm expecting a breakout and it's not breaking out. It can't even inch higher, a dollar higher than a $150 name. Same thing. I can either get out break even at my price or give it versus 146. And this morning it was, within pennies of going there anyways. So same thing, lost nothing in it. Had I traded it properly, I will have lost $2 in the name by tomorrow. And then lastly, when we talk about these winners letting them work, MMC is a good example where this one I had been in for quite some time. I made some money at, buying up to 140, selling it to 150, and I still have my original stock from 120. And now this is one, again, it's up 30 some odd percent. And now this is one that I can move this stop up. And if this wants to roll over, I'll have no problems with taking the 30% gain. I'll still hold some back to break even because, I can still maybe get 40, 50% out of it. But I do have a stop now for some under this like 156 area, just to make sure I do take some profits after this move that it has had. So again, those are my trades. Again, the main thing was just those newer trades being willing to get out of them as quickly as possible because we haven't really had the market conditions to kind of push them higher. And then with the ones that have been working, just trying to give them a little bit more room and make sure we get as much out of them as possible.
Nice, love it.
All right, so with that, you want to get into book of the week?
Would love to. So I was reading a classic, just looking for some quotes. The Art of War by Sun Tzu. You obviously you've read this, correct?
A while ago, yeah.
Yeah. So he talks about the 5 essentials for victory. And number one, it's the most directly related to trading in the market environment we're dealing with right now. He will win who knows when to fight and when not to fight. And I just can't explain how important that is in the trading world, where it's like you can't be full go 100% of the time, trading 100% of the time. You know, the best thing I did these past 7 days was absolutely nothing. Absolutely nothing. Action wasn't there. The setups weren't there. I wasn't setting a lot of alerts. You know, just no forcing it at all, and I couldn't have been happier with how I did that. So he will win who knows when to fight and when not to fight. Right now, it's not time to fight. The past 4 or 5 weeks before it was the time to fucking go to war. But now it's time to not really fight. So you got to take every piece of information you can into account in deciding these things. But I just passed that quote, and I thought it was very relevant for what we're dealing with. He will win who knows when to fight and when not to fight. That's it. It's simple.
Love it. So I just finished the Spotify play about the Daniel Ek, the founder of Spotify. And I think the main thing was, again, the big premise of this book was them constantly fighting the record labels, and the record labels always hating Spotify's freemium model. Like when you set up Spotify for free, you can listen to the ads, and that was a big source of the revenue. Where in the beginning, the record labels were like very against that. They still looked at it kind of like in an Napster kind of vibe, where they were just kind of pirating the music, and they didn't see much from the ad. They didn't see like the ad revenue business really being justifiable to give the music away for free. And he constantly was fighting them for literally decades before they went public, even until they became public. He was still constantly battling with the record labels, and he constantly showed, he's like, we've paid out, I think to date it was like $15 billion in royalty income to these 3 major record labels. And then they start to now come around to the idea of, okay, the streaming model might be more of the future than the buy the song once and own it. Like people will be okay with just paying the $10 a month to stream the music versus physically own the album. And that was like the main thing of that he had to continue to portray day and for weeks and months and years of constant talks of just hammering that in. And then finally him being able to show it, like, look, we've paid all this money out. We're sending you guys more money than any record sales you guys can have on your own. And it was just an interesting story. And he's like buddies with Zuckerberg, and it was a cool story again to better understand, especially the stock itself. Like I don't really use Spotify, I use Apple Music, so I guess that their competitor, but very interesting read. Definitely you understand their business model more. Like at the end, the last page, it's like they had, I think it was 300 million active users, and like 150 million of them are actively or are paid.
Paying.
Yeah, paying. So it's like, all right, they're bringing in, I think, what's it, $1.5 billion a month in revenue.
Right.
And that's it's
pretty good.
That's a
for
lot.
Yeah. But I think the most interesting part about the Spotify model is that they don't care if you're a paid user or a free user, because they're making almost as much per user via the advertising from the free users than they are from paid users. So like they don't care if you're paid or free. They just want you in the ecosystem.
Yeah.
So I just always thought that was so interesting.
That was one of the things where like Apple Music gave 3 months for free, and then they auto convert you. They were talking about like what Beats, before Apple bought them out, when Beats had their streaming service, you had, I think it was like a week for free, and then you were converted. So all the other competitors were, you can have a free trial, but it automatically converted at some point to a paid membership. And Spotify was, like you mentioned, in that camp of they're always going to be free unless they want to upgrade on their own. And that was like it was like the thing they wouldn't undo. Like that was like, no matter what the negotiating talks were, they would not like change that to auto convert the person to a paid member. And some of the other things, they tried to venture into videos, and they realized very quickly that it just wasn't for them. Spotify and a lot of these streaming services, like their thing is their background noise of the when they want to make you're cooking dinner, you put Spotify in and you listen to music, but it's not the main focus of what you're doing. And that was like, again, a big lesson that they had to learn. But they learned it very quickly. They lost like $20 million, or they spent $20 million on their trying to build out more of a video streaming service, and it quickly nixed it when other competitors went down the rabbit hole on that venture and spent way more.
Yeah, I mean,
for it not
YouTube's got the stronghold.
Well, it was like them trying to compete with YouTube, and it was just like you couldn't compete with them in that regard. You had to stick with.
Yeah, they're too cemented.
Yeah, but definitely an interesting read. I'm looking at Spotify chart right now, so definitely like to understand this. No, the chart wise is pretty nuts through 200. I'm just looking at the weekly. like in 2020. Like that crazy move.
Oh yeah. We fucking crushed that.
Yeah. So interesting read.
Good stuff, huh?
That's it. Yeah.
All right, I guess we're out of here, folks. You know, give us a link, a like, subscribe, ask some questions. I don't know, same shit. We'll catch you guys next week. All right.